is Don DeBartolo, a senior commodity broker and market strategist with StoneX in Chicago. I am also the trader behind the Trade Spotlight Advisory Service. My advisory service is broken into three segments. I cover the futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that will spotlight two or three markets that may become trading opportunities for this week. This week begins with Monday, March 14th, 2022. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Let's jump right into our first chart. This is the July 2022 soybeans. You take a look at this chart, you can see a long lower trend line that I've drawn off. That first low was made on the 18th of January, 1365 3/4. We bounce off there again before a nice rally in the beans, and then again one more pullback off that 12-month contract high that was made at 1741 on February 24th. We made that low the next session at 1568 3/4. And then you can see the market has consolidated, grinding along this lower trend line and also creating a flat top. What I'm looking for is a close below this trend line. We got close on Friday. You can see Monday's trading action here today. We're trading right along that lower trend line. A close below that trend line, I believe, will trigger an entry to the downside. And then what I'll do is place a stop loss above all of these recent highs. That one that's popping out right there is 1689.5 from the 9th of March. That could be a good area to place a stop loss. If you want to play it a little more conservative, you can absolutely go above that 12-month contract high. But I'm waiting for confirmation of a breakdown to the downside on a close below this trend line. That can come as early as today's trading session. You can see my 20-day moving average is waning, but it's not down just yet. Same goes for the 50-day and the 200-day, this dark line below. Looking at my indicators, my trend indicator, a MACD, is showing that the market is getting into a downtrend. The stochastic indicator is showing downside momentum, but not much, and that's evident of the chart action that you see here. Last few weeks we've been sideways. And then the GBE trend indicator, turning point, and then the GBE turning point indicator is flat as well. Again, evident of a sideways trading market, so I don't want to get into a position unless that lower trend line is broken, and then we won't be taking on much risk with the stop loss just above this high. And the second chart I want to take a look at today is the May 22 coffee chart. I have a lower support level drawn off going back to this main low here on the 1st of January at 220.70. You can see in the last week or so we've traded off of that lower trend line, and then finally today I'm showing Monday's trading session. We are trading below that support level. What I'm waiting for again is a close below this support level. This will trigger an entry to the downside. Coffee can be volatile. You can see some of these big trading ranges that have occurred as of late. So what I like to do is look to the options market to get involved in this market. I drawn off the 200 level with this horizontal line showing another possible support level if we're going to be looking at put options, the 200 outright puts, depending on the cost and the volatility. Could be a good purchase here, or perhaps even setting up a spread like a 220-200 spread, put spread, to keep the cost down, but still have us as close to the money as possible. We did break down below this lower trend line last week, but the indicators, as you can see, were showing that the market was potentially oversold. Obviously, the market continued down. We did have this bounce late last week, but now the indicators kind of rolled back up, as you can see. Here's my MACD, rolled back up and is back down. Same with this GBE turning point indicator. The MACD is showing a strong downtrend in this market. So I believe this market has room to go down to at least 200. So ideally outright put options so we can not cap our reward, but also know our risk of loss and not have to worry about a stop loss in a volatile futures market. If we're trading options, and they're outright puts, I may just use the May. But if it's something like a spread, I may go out to July, just to buy ourselves a little more time. And I, of course, will note that in the email that goes out. And here's an example of an email that goes out. This was sent out last week. We are long the June lean hogs at the moment. This gives you an idea of what you can expect if you're following my trade spotlight advisory. It's got the write-up of the trade, the precise entry and exit orders, so you know the risk of loss or the potential reward on a trade. There's a chart that you can click to open up to view more. If you're not following the Trade Spotlight, I encourage you to do so. Just head over to the Daniels Trading webpage, and under Advisories and under Technical Analysis, you'll find Trade Spotlight. You can read more, see recent posts, and click the orange button to subscribe. It's a free service to anyone out there, non-client, client. If you want to work with me, though, you can open a trading account, and I can be your personal broker to assist you to manage these trades. Here is all my contact information. If you do have interest in opening an account with me, or just questions in general about the markets or these charts I discussed today, thank you for taking the time to watch and listen, and happy trading.